Alright, what's going on, guys? Welcome back again to another brand new video. In today's video, I'm going to be talking to you how you can flip a small Forex account into some sort of a medium. I don't want to say large because this process can take a while to get it from medium to large. But when I say a small Forex account, I'm talking about like $100 to 1,000, $100 to maybe 2,000, because the bigger the account is, the easier it is for you to make more money because you're able to place trades with bigger lot sizes and stuff like that. But when you're trading with 150, you're really capped onto the profit you're making because of the lot size. You can't really place bigger lot size to make. I'm sorry, hold on. Strategy basically works on any size account, to be honest, because whatever you're applying on the charts, it could be, if you're profitable. It doesn't matter the account size. If you're consistently profitable and making profits, what does it matter if you're making $100 a day or $1,000 a day? It doesn't matter. What matters is that you are consistently profitable. So therefore, money is not even a question at that point, because you can just buy an FTMO challenge and boom, you go from making $100 a day, you buy a 200K account to make 10%, boom, you're literally making tens and 20s of thousands of dollars a day. So it's a really no-brainer. This is how you start this challenge. Basically, let's say you jump on a chart, right? Let's say today is Monday, you want to start trading, you deposited $100, let's say, right? Let's start with $100. You deposit $100, boom, you go on the daily instantly, right? On the daily, I want you to figure out where's your last structure points. Now, I made a video about market structure, go back and watch that. So how do you figure out where's the last market structure point, and if you are in a bearish or a bullish? Now, obviously, in this scenario, AUDSD, we are in a bearish market structure. So let's mark it out so we kind of figure out where we are. We got a high, a low, little retracement, lower high, lower low, lower high, lower low, lower high, equal high here, equal low, lower high, and then lower low, and then here a lower high, potentially to make a lower low. So boom, now I've identified that we are very, very much at a lower high point. So now I'm only going to be looking for sells. I've identified the market. I know that I'm bearish. I'm going to only be looking for sells. Now delete that. Boom. Now I know on the daily, you can even make something like this and then highlight it. So let's say zone, and say that this zone is our daily market structure point. On the daily, you go down on the 4-hour time frame. Boom. On the 4-hour time frame, now you're going to identify on the 4-hour, this is the retracement on the daily, right? So we know that this bullish 4-hour market structure is only a retracement on the daily time frame. Now what you can do is clone this, click here, clone, and then move it to, oops, and then you can move it here. Say that if market surpasses that point, that's when maybe I should be looking for buys, because then market structure is bullish right there. Make that neat like that. So now when we go on 4-hour time frame, we are not lost. We know that everything below this level is bearish. So what are we going to wait for? We're going to wait for a break of structure on the 4-hour time frame, right? So now we can mark our 4-hour market structure. So we got a low, high, higher low, higher high, higher low, higher high, higher low, and higher high, higher low, higher high, higher low. Didn't make a higher high. The candles closed just equal. So it made an equal, and now it literally just made a lower high, and now it came back to retrace to that box, to that region, to make a lower high point, to then potentially take it to the downside, right? Boom, there we go. So now we've identified on the 4-hour market structure, we have a break of structure to the downside. Now that is aligning with our daily market structure, which is to the downside. So now, okay, we have something building. So I identified that we have a break of structure, so you can highlight that by simply putting a line, say that, boom, okay, we have a break of structure. Now go down to 1-hour time frame, and on the 1 hour, very, very, very clean break of structure. We have our last higher point, higher low point, and then price broke that, came back to make a potential, and then here you can even place something like this to see that maybe there's a 1 hour trend line starting now, and then price will continue to the downside. And here what you also can do, place a symbol Fibonacci from the high to the low, and then what do we have here? We have a 61.8 retracement. Very possible that market could even push a little bit more to the 78.6. So as long as candles close within this region and not above the 100%, it can test that. Wait for candle closure. It's very, very important to wait for candle closure. So as long as the candles are closing below this region, we are good for a sell. So let's say now you're waiting for something to happen, and you're waiting for like a nice bearish engulfing, all that stuff. Let's say this bearish engulfing happens right around the 78.6, then you can simply take your short position, enter. Stop loss would be just above the highs, you know, a little bit further, but yeah. And I don't care about how many pips your stop loss is, because if you're only risking 1%, I don't give a shit how many pips your stop loss is, because it doesn't matter. It can be a 50 pip stop loss, it can be a 100 pip stop loss. As long as you're risking 1%, it's all about money at this point. It's not about pips, right? Now, sure, when you have a 10 pip stop loss, it looks better, but when you're only risking 1%, you're gonna risk 1% no matter what. It can be a 100 pip stop loss, but obviously your lot size is gonna change, and therefore you're going to play around with a pip calculator. Go Google, find one, and then yeah. So let's say you have a 10k account, you risk 1%, 10 pips, that is $100. To make potential is a first take profit. We have a 1 to 4.2, we will make $400, and down here is your second take profit. You'll make 560 bucks, something like that, and you only risked $100, right? And then it's 30 pips stop loss, right? Even if your stop loss was 50 pips, you can then lower your lot size to match that 1% risk, and that's how it works. So stop loss below, and boom, you take it down to the downside. This is the easiest and most simplest way to follow and make trading as simple as possible, simply by knowing where we are at market structure. Is it a higher point? Is a higher high? Is it a higher high point? Is it a lower low? Is it a higher wherever you are in the market? Because if you're lost and you don't know where you're going, it's very, very difficult to keep track and build an account, because you will lose more than you win. But when you're waiting for break of structures, you're waiting for higher highs, higher lows, and you know exactly what's happening, and you're catching bigger moves. The secret to growing a small Forex account, now you see a lot of gurus out there catching 10 pips but making so much money because they have a massive account that they can place 30, 40 standard and catch 10 pips and make 30 and make 7 grand, 10 grand, 20 grand here. But if you have $100 account, you can't do that. You can't catch 10 pips and live off that. You need bigger movement. You need a lot of pips to grow that account with small risk, and the only way to do that is to catch bigger moves, right? It's just my personal opinion and what helped me grow my small Forex account, right? I will bring the series back where I start from $20 a month. I know I've done a few videos about that. You guys absolutely loved it, so I will bring that back. We will start a new series where I grow a $20 account into whatever amount we can get it to, and I will be doing that live. So guys, if you are interested, join down below. I will be going live, and all the links are down below in the description. In my opinion, how you can grow a Forex account by catching longer moves, because let's say you have $100 account and you're risking 10 pips, but you just made $50. You just doubled your account. You see what I'm saying? So yeah guys, and obviously psychology is a whole nother topic. I will make another video about that. If you guys enjoyed today's video, please leave a like, comment, subscribe, and I'll see you in the next one.